New
Mr.
Jersey.
Chairman. Ms. Yantel, the National Low-Income Housing Coalition's 2022 Out of Reach report showed just how hard it is for low-income renters to afford even modest housing. In my home state of New Jersey, for which, by the way, we have something called the Mount Laurel decision and a whole host of others, so we don't have that exclusionary zoning that my colleague was talking about, a median income renter is barely able to pay for a one-bedroom home. The fact is that there just aren't enough rental homes being built, and part of that is because federal lending programs through HUD and the Federal Housing Administration haven't kept pace with the market. So, Ms. Yantel, is it true that FHA's multifamily loan limits haven't been adjusted since 2003?
That's true.
That's 20 years. Is it also true that even after adjustments for inflation and higher cost areas, FHA multifamily financing isn't a viable financing tool in many parts of the country?
In many parts, yes, that's true.
Would you say these limits pose a challenge to HUD and FHA meeting its mission to provide decent, safe, and sanitary housing?
I would.
That's why I introduced a discussion draft for today's hearing, Mr. Chairman, that would modernize FHA's ability to finance multifamily housing construction around the country. It's a simple, common-sense proposal that would update FHA's lending ability to accurately reflect the increase in construction costs over the past 20 years. So we look forward to working with you, Mr. Chairman, members of the committee, to empower FHA to meet this one challenge. Now, flooding is one of the most frequent and most expensive natural disasters impacting homes in the United States, but just 4% of Americans have a flood insurance policy. Ms. Yantel, isn't it true that low-income families disproportionately face increased flood risk?
Yes, lower income communities and often predominantly communities of color are often located in low-lying areas that are susceptible to flooding. And mitigation dollars and disaster recovery dollars are often not provided to these communities, sort of continuing a legacy of disinvestment in these lower income communities of color.
And
So
what
they
does
don't
that-
have the infrastructure that they need.
And what does that mean for uninsured or underinsured working families and their disaster recovery?
It means that they don't have the infrastructure they need to prevent or mitigate the effects of flooding. And then when flooding occurs, often the resources are diverted to other communities. I would add, too, that there is a large number of subsidized housing, about 450,000 units of HUD-subsidized housing that are located in flood-prone areas, and some of them are located in areas that repeatedly flood. So this not only puts low-income people in harm's way, but it costs the government more over time to continuously repair the damages from floods.
Now, FEMA has long struggled to keep premiums affordable, but it appears that the NFIP's new rating methodology called Risk Rating 2.0 has only made flood insurance more out of reach for working and middle-class families. In Paterson, New Jersey, where the median household income is $50,000 a year, 180 homeowners will see their premiums increase from an average of $1,500 a year to an average of $4,000 a year. So the cost of flood insurance is tied directly to the affordability of home ownership, especially if your mortgage provider requires coverage, which most do if you're in a floodplain. So I worry many families face an impossible choice of being overburdened with housing costs or foregoing insurance for their most important financial asset, which is their home, which is why I'll be reintroducing my bipartisan NFIP REACT, and I appreciate the chairman's going to be having a hearing on flood insurance, which is critically important. Finally, first responders, teachers, law enforcement, other public service employees are integral to our communities. The pandemic especially provided countless examples of these individuals stepping up when we needed them the most, and in many cases putting themselves at risk to do so. Regrettably, many public service employees are facing rising expenses that are driving them out of their professions. In recent years, we've seen increasing dire shortages of police and teachers, to give a few examples. Mr. Tisler, would a program to make credit-worthy public service employees eligible for a one-time mortgage with no down payment and no mortgage insurance premium make housing more affordable for these individuals?
Senator, being able to make mortgages available to those who have taken care of us is of utmost importance. And when looking at being able to access loans in terms of zero down, low to no interest, it is what we owe those who are stepping up to be able to make that happen. We would be able to see, again, first responders, essential workers, being able to be closer to where they work to then therefore save money on transportation and other things, childcare, et cetera, if they could buy homes in the areas that they're working in. And we're not seeing that happen now.
Thank you. That's what my Bipartisan Helper Act is, and we look forward to working with the committee on that. Thank you very much.
Thanks, Senator.